Wayne, so we've seen quite high volumes throughout the week.
Yes, it's been good volumes, and it's actually locals. Foreigners, I mean, I might be wrong on this, but foreigners haven't been too involved in our market except for one share. They have, well, in fact, two lots of shares.
Yeah.
The one share they've been flogging like you can't believe is MTN. About 40% of all foreign sales.
136 Rand.
Yeah, 40% of all foreign sales have just been in MTN. So this whole story of sanctions and Iran, foreigners are piling out of this one at a rapid rate.
Should they be, Wayne?
I don't think so. I think it's value where it is. But I mean, foreigners are a funny bunch, essentially. They look at the South African holdings, and it's normally very small in their portfolios. And whenever they smell trouble, they just say, I don't want to explain it to my shareholders or my clients. It's so small, let's just get out. And they just get out. They don't worry about valuations. It's so small, they just can't stand the pressure.
So there's opportunity then?
There is probably for South African people to come in and take it. Of course, there was the other group of shares that the foreigners are really selling are all the retailers there. There's big foreign selling in the retail side. Now, just on MTN, news came out this morning that Turkcell, which is another cell phone operator in Turkey, they bid for this license in Iran and lost it to MTN. Now they're saying MTN bribed South African politicians and Iranian politicians and forced the South African government to give a favorable view at the United Nations on Iran. Well, we'll see what happens, but I think they're sniffing that something's wrong here, that MTN's not too happy with its Iran stake and all of these other political pressures, and they're just in there as opportunistic to see what they can do. So I think this will blow over.
In a way, because it obviously says that asset is quite valuable.
The asset is very valuable. Volumes, the profits, look, it's small in MTN's life, and in our view, it's already taken off the price of MTN. So you actually, the bad news is already in the MTN share price on this. But although it's small in their lives, it's actually a highly profitable operation. So it's a very, very desirable asset, in fact. So we'll see what happens there.
Vodacom is trading above 100 Rand for the first time ever. It's trading at 102.20, and it's up 2.3%
Vodacom's
today.
Actually, if you like a dividend, solid, fairly stable, you must buy Vodacom. It's actually quite a good share to own. It's not terribly exciting, even at these levels. Not terribly exciting on the growth prospects, but still a very good share to own.
Old Mutual,
yes, that's interesting.
Shareholders, £1 billion
now, you know, people have got the shortest memory. This share was, what, $6?
£5, yes.
$6 not that long ago.
And 2008, the company, wasn't it?
Okay, forget the share price. Let's just talk about the company.
Yeah.
The company was probably in danger of going bankrupt. Now we're getting £1 billion special divvy out of it. Things can change very rapidly in companies in literally, what, 2 years? I don't even think
hopefully,
it might not even be 2 years.
Sovereigns learn from companies to change the way.
Yeah, but look, it just shows you. I mean, Old Mutual went overseas, and quite frankly, they lost a bucket load of money. But they saw the problem, and they fixed it now, by and large, to the best of their extent, to the best that they could. And this has actually been a fantastic share to have owned for a short while now. And you know, maybe even the good news is trading close to 19 Rand, but there's probably still more to go.
Okay, well, how would you play this then if
you
want to take part?
No, you hold it. You can even buy it now and get the special dividend out of it.
When does the special dividend?
I don't know. I'm not sure when it comes. Yeah. But simplistically, there's probably still value to 21 Rand, maybe even a bit more on this share, and it's now almost 19 Rand now, so you can probably hold it. But you know, once again, just to stress, excellent companies of today might be terrible companies in 3 years' time, and terrible companies today, like the Murray and Roberts, like all the companies we all hate, might in fact be incredibly good investments in 5 years' time, because companies can change.
Stocks, though,
I don't know, it's hard, and you take the risk. Because, I mean, Old Mutual is the prime example.
And I'm glad you mentioned Murray and Roberts, because when last year we saw them posting a first half loss for the first time in 10 years, yes. Things changing at the top.
Oh, yeah, they've gone through.
Coming through.
I mean, can they have any more problems? Rights issue, water in the tunnel, problems with the power stations. Oh, can they have more problems than what they've got now? New management, strained balance sheet, all of these good things. Now, personally, I think it's still too early to buy Murray and Roberts, and maybe it is too risky to buy it. But the point that we're making is some of the dogs of today are actually good investments because their companies can recover.
So speaking of some of the dogs, especially last year, platinum sector.
Yes.
we saw Impala's having troubles, Anglo Platinum has got its own set of troubles. Northern Platinum out with a trading update.
Yes, but there's a big base effect.
There's something, exactly. This is what to have headline earnings per share increasing by 156, by as much as 156%.
I can't remember if it was a BEE deal or there was some big write-off last year that severely depressed. But their results were not bad, and Impala's results were also not bad because they're also working off a distorted base last year. So the year-on-year percentage change is quite frankly meaningless because of the number you're measuring of last year. But I still think, look, I've been very negative on platinum shares for a number of years now. I still think it's just a little bit too early to come into the platinum shares.
And which ones would you pick?
I don't think it makes much difference, quite frankly. Probably Impala. But I still think it's a little bit too early to go into platinum shares. But they've had their big fall. But
you have your diversified plays, though, in your portfolio.
The big fall has happened. They're lucky enough we've got Anglos and Billiton and lots of them.
Let's touch on Investec.
Yes.
Operating profit for the 9 months to December down 5.6%.
These are not good numbers. Look, I think by and large people are expecting it. Investec is just struggling. Now, all of our analysts tell me, and all of the stuff I look at says to you Investec shares are cheap. But cheap shares only turn into profit when the company turns around, i.e. the company starts growing their profits. And that doesn't seem to be the case yet.
They've quite a few companies, though, over the past
yes, they
while.
have, and it's quite normal for them to do that. They're relatively small. I mean, these are not earth-shattering, company-changing acquisitions that they've made. They're relatively small. Look, it's a tough market in the UK there. Asset management's doing well, but the property business and the finance business and all the other things that banks do, it's tough in the UK. Eh? And the SA market's all right, but it's also a little bit ex-growth, for the time being.
Do you trust Stephen Kossoff, though?
Yes. The share price at a 12 PE, I think they're cheaper shares. I think they're cheaper shares with better earnings, better short-term earnings growth than Investec. But a 12 PE is not expensive. And of course, the big argument there is the price to book on Investec's very low. Eh? So in theory, if they can just tweak a little bit more return out of their asset base, the profit growth can be spectacular. But we've got to see it.
Okay, when you say better shares out there,
I'd rather buy ABSA. I'd rather buy ABSA or First Rand, better banking shares out there.
Okay.
But look, Investec is cheap. The share is cheap. I just can't see the turnaround. I mean, I know the UK data came out now and it looks reasonable, but the UK as an economy is in deep trouble. I mean, the US has still got enormous accumulated wealth that they can rely on. They are still a highly productive economy. The UK, I mean, they're just in trouble. Their property market's just in trouble. The government's in trouble. They're not big exporters of, they're not big manufacturers and exporters. They're tied into the euro, so, maybe a weaker euro will, when I say the pound's tied into the euro, the exchange rate to the euro is quite relevant, but their economy's tied into the European economy. And the European economy is not disastrous, but it's not good. So, I can't see a big recovery in the UK operations of Investec in the shorter term. I can't see it. And, maybe you should own one of the other banks and wait another year or two until Investec.
So you're saying ABSA, and you mentioned the other?
No, well, you can buy, quite frankly, the other banks are all fairly evenly valued. ABSA may be a bit better because it's quite likely that ABSA is going to come with a special dividend as well. There's actually quite a few companies with capital that might come with special dividends.
So the truth is that when you look at where we are on the JSE and, even closer to 35,000 points, what's really been driving us there is not the resource companies, which they have their biggest weighting on the top 40 and JSE as a whole. Yeah. It's actually the industrials.
Yes, totally.
Can they keep this up, given the fact that a lot of, retailers fall under the industrial sector, and if we see a rotation out of industrials, could this mean an overall pullback within the space?
Look, the power this year has actually been evenly spread across the whole board, and surprisingly enough, led by resources. They're just not back at their previous highs. So all the shares hitting new highs are virtually all in the industrial space. But the actual rise this year so far has been powered by resources. Man, I think this can be kept up for a short while, maybe another month or so. But if the market, let's just say for argument's sake, the market goes up another 8%, we would be sellers if it goes up 8% in the short term.
Is that sort
because
of your target?
It's so hard to set targets because things change. But all that's happened, and I'll say it again, all that's happened so far is a relief rally because people realized there wasn't a disaster, it was just bad. But the point is, once again, things are still bad. They're not good, they're bad. And we'll see what happens.
What is the most recent stock that you accumulated?
Oof.
Clearly, was it this week?
No. We in fact trying to keep our portfolio turnover quite low, because everyone says they're long-term investors, and yet you do all of the short-term trading. So we're trying to keep our portfolios fairly. I mean, what shares have we bought? We have bought some BTI on the back of the weakness that we're seeing in BTI. We're buying a little bit more MTN back on the weakness, but these are very small acquisitions that we're doing, and we're only doing them because we think the shares have probably fallen too much. We haven't capped anything off yet. We haven't sold any of the big runners yet. We haven't sold any resources or any of the banks, because the banks have also been running, and banks have been quite strong.
Yeah, it's a tough time to actually try and time it properly.
So one of the worst things, there's two difficult things to do in investments. One is to sell something that's going up, and the other one is to buy something that's going down.